You've probably seen it everywhere. The news, your feed, right here on YouTube even. Price reductions are happening. And people are saying that means the market is crashing. Price reductions are a sign, but they're not the sign you think. There's a lot more going on that you're not being told about. And here's where most of the headlines miss the point. The big reason we're seeing price reductions is simple. A ton of sellers are overshooting the market. Some are even pulling their homes completely off the market. Delistings are almost at 50% nationally according to Realtor.com. If the market were truly tanking, those sellers wouldn't be delisting. They'd be slashing their prices until they found a buyer. Instead, what we're seeing is sellers are testing unrealistic numbers and then retreating when it doesn't work out for them. If you don't know me yet, I'm Karl Kyler, your San Diego Realtor, and I've been helping buyers and sellers just like you navigate the San Diego housing market. If you're not a subscriber yet, it'd be great to see you jump on board, and it's pretty simple to do. You just hit the subscribe button, and then you'll officially be one of us. Now, let's talk about these price reductions you keep hearing about and really shed some light on what's going on. Let's imagine in today's market, if a seller goes to market at 1.8 and eventually drops their price down to 1.6, does that mean the market fell by 200,000? No, it means that the market was never at 1.8 to begin with. That seller was simply testing the waters, maybe trying to cash in on a neighbor's big sale or hoping for a unicorn. And that's probably one of the most common things I hear. Like, where are all these unicorn buyers people are talking about? And it's not only homeowners, investors are running into this as well. Flippers will look at an area and think, okay, well, the homes are selling for X amount typically, so I can get that as well. But what they're missing are the micro details that buyers actually care about. Now take this home for example. It's phenomenal, absolutely stunning. You don't see flips done to this caliber very often. If this same house was listed 4 or 5 blocks that way, it would sell in a heartbeat at this price. But here, it's on a busier street, closer to a grocery store, and those little things chip away at what buyers are really willing to pay for. So if this home reduces its price, does that mean the entire market's crashing? No, it means that the value was never aligned with when taking into account the condition, the location, and all the other dynamics of this home. And that's the big difference between now and the early 2020s when demand was on fire and rates were around 4% or less. Back then you can overprice a home and buyers would still line up. Today, buyers are more cautious because affordability is stretched, and that makes precision in pricing more important than ever. Here's the simple test for a crashing market. You need more supply than demand. That's it, period. It's not about how much inventory is out there. It's about the balance between supply and demand. And in San Diego, the data doesn't point there yet. And the July numbers back this up. New listings across the county were up almost 4% year over year. Detached homes, flat, zero growth. Attached homes and condos, townhomes as such, those were up about 10%. And sure, that's some growth, but it's nowhere near a flood. And prices tell a similar story. Detached homes, both median and average price, are still up compared to this time last year. Now, attached homes are where we're seeing some softness, down in both median and average price, but that's only been negative for the last 2 months. That's the very beginning of a possible trend, not proof of a crash. To me, this looks more like a neutral market, not a runaway seller's market, but definitely not a market in free fall favoring buyers. Now for some contrast, let's look at markets where inventory really ballooned. Places like Phoenix, Austin, or Tampa. In those metros, supply has grown so much that it's actually overpowering demand. That's not San Diego. We've got modest new listing growth and mixed price action, but a supply glut, overwhelming demand doesn't exist here. Now let's add one more piece to this puzzle, affordability. Here's what's really keeping buyers cautious, interest rates. At today's level, affordability in San Diego is stretched thin. Buyers are picky, they negotiate harder, and they're not chasing overpriced listings the way they did when rates were under 4%. That's why you're seeing price reductions, not because the market is crashing, but because buyers are forcing sellers to get realistic. And there's the key difference. For prices to actually drop across the board, 2 things would need to happen. Number 1, rates would need to stay where they are or go up. And number 2, inventory would need to explode past pre-pandemic levels. And right now in San Diego, we're nowhere near that. Detached home inventory is still far below where it would need to be to overpower demand. Condos have grown more, but even that bump is tapering off earlier than we expected. And there's another thing to remember. Most sellers are home buyers, and with so many home buyers locked into interest rates that 4% or less, selling isn't as realistic for a lot of them. Even if they want a bigger home, the idea of trading their low payment for today's much higher interest rates is a non-starter. That's actually one of the biggest reasons our inventory growth has not exploded. Homeowners don't want to give up their golden handcuffed interest rates. Bottom line, price reductions aren't proof of a crash yet. But if you'd much rather prefer to believe the doomsdayers all over YouTube, then by all means. And if you like, please feel free to leave your comments on your insights and perspective in the comment section below. We'd love to hear your take. As always, I'm Karl Kyler, your San Diego Realtor. We'll see you next video.